James Bevan is Chief Investment Officer at CCLA Investment Management, and he's with me. James, first of all, I hope you're not planning on holidays on BA this Christmas.
No, absolutely not. Safely staying at home.
What about the stock itself? You know, surprisingly, not really reacted to this news.
Very largely, British Airways problems were well known to the marketplace, so, of course, fully discounted in the share price.
Right, where do we go from here in terms of British equities? I mean, given what I just said in the introduction to you about the problems inherent here with the fiscal side of things.
Interestingly, I think for British equities, we probably have a decent first 6 months of the year, and I can easily see the FTSE making new highs in the context of what we have seen thus far in 2009. I think the real challenge is the second half, because if I'm correct in assuming that we have to have higher gilt yields, that obviously means not only higher debt costs for both companies and individuals, but more demanding relative valuation metrics. And I think that all of that spells significant trouble in the second half for next year.
There is the other issue as well, as far as when you talk about gilts and the ownership of them, 30% foreign-owned. It's just indicative of the openness of the British economy. Does this point to you of sterling weakness looking ahead, and how does that affect what you do in terms of your investment decisions?
Dealing first with the gilt market, the numbers are really stark. 96% of gilts this year have been bought by authorities, but 92% of quantitative easing is over. You're absolutely correct. 30% of gilts owned by foreigners, but we are having to see the equivalent of 26% of current capitalisation issued next year in order to pay for the deficit. So the numbers are really big, and I do think that one of the problems will be people looking at the pound and saying to themselves, do we really want to support the British government? Absolutely not, because we have the relative weakness of the pound, and I think that...
Oh, the perception of sterling weakness in the pipeline could make people run away as well.
Non-paradness support the currency, absolutely, and I do think, therefore, non-UK earners are going to be really very attractive, and I would highlight GlaxoSmithKline, AstraZeneca, the usual suspects, as companies very capable of delivering earnings surprises that are positive.
Let's move across the channel and have a look at continental Europe. It's a different story there altogether. Germany, your favourite?
Do you know, I think a lot of people have written off Europe as a real problem area, and I see Germany as extremely well placed. I see balance sheets that are relatively conservative, and I see significant opportunities for what many people have written off as companies that cannot deliver as really very exciting. So I would put Porsche down, I put Siemens down as companies I think will deliver above average returns through next year.
So keep it there in Germany.
Absolutely.
Overweight as far as continental Europe goes.
Quite right.
James, thanks a lot for that. James Bevan from CCLA.